Good afternoon, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures here in Chicago on Wednesday, October 30th. Some commentary here in the energy markets. So let's get started. Crude prices right now were weaker. We're off about $1.15. We were just trading at 97.05. We just had FOMC release their minutes and some commentary here, and crude prices just shot down here and made a new low down around 96.55 here right before I was getting ready to come on. Brent, on the other hand, was a bit firmer, up about 41 cents, around 109.42. Look at that spread we've talked so much about here, seeing that widen out a little bit here today. Nat gas up about 1 to 2 cents. Complex a touch firmer, that's up about 1 to 2 cents also. So what do we have going on here today? Well, no surprise, equities markets are a little bit firmer here today. As I mentioned, FOMC, they're still leaving that no taper here for the foreseeable future. Still leaving that $85 billion in place here for right now. Not a big surprise there, in my opinion. Most of what they said, I think, is just more regurgitation. I don't think we'll see anything even close until maybe first quarter, possibly second quarter of next year. So looks like things are going to remain on track here. Now, oil, I'd say the big news story here for the day in oil is EIA data. And if you look at my last post, traders are looking for a build of about 3 million barrels. That's what I had mentioned there. It's kind of what was on par. API numbers came out yesterday. They were looking for even a bigger build, up over 5 million. Today, EIA came out here, and we got a build here of about 4 million barrels. So, again, another build. And I've said this in so many posts here, talking about the supply side on oil seems to appear to be more than adequate. Look at our current stockpiles here for this time of year right now. We're sitting at around 383, almost 384 million barrels. Let's put this in perspective here. 5-year average is about 345 million barrels for this time of year. So almost 40 million more barrels of oil that we have on hand. The lowest stockpiles for this time of year is 100 million barrels lower, down around 283. If we look at our highest, okay, which is currently right now, but setting this aside, will be around 373 million barrels. So what does this all add up to? Again, plenty of oil. We've got 10 million barrels more on hand than the highest stocks that we've ever had for this time of year, and we're running almost 40 million barrels above the 5-year average. And then when you look at what the FOMC did here today with not doing anything, what does that tell you, folks? That tells you that things aren't that great out there. Now, if you look just at the equities market, you'd think things were wonderful. But I'll tell you what, if you remove that $85 billion a month that they're pumping into this economy out of there, I think this thing would fall flat on its face. I think it's being artificially supported, in my opinion. Hence the reason why the demand outlook for oil appears to be sluggish at best. So there's some real opportunity here. I think oil prices still have the potential to move a little bit lower. Now, let's talk about here the last couple of days and what's been going on in the technical side of things here. Well, as we know, we got this little bit of a bounce up, and that didn't come as much of a surprise here because short-term technical indicators were really oversold. Yesterday, though, we had an inside day, which means that the entire price, the entire trading range yesterday basically would fit inside the previous session. And there's a trading strategy there. For those of you that know it, great. For those of you that don't, give me a call and I'll explain to you how to play inside days, not just in the oil market, but other markets as well. We had an inside day there, which is a good sign of consolidation. And then, of course, here we've seen this market breaking here today. So crude prices have been weaker. And, I thought there was a chance they could maybe get to 99 and a half area. As I'd mentioned, the Fibonacci retracement areas in my previous post, as well as a 200-day moving average. The market couldn't even garner up that kind of strength here. So at this time here, I think we're probably gonna target around that low that we saw, which is right down around $96 a barrel basis December oil. So give me a call, shoot me an email. I've got some trading strategies that we're looking at. I've got some option ratio strategies that we're gonna be taking a look at. Give me a call. I can explain to you, how those work and how you can trade those. If you're interested in paper trading some of my ideas, or you're new to futures trading and you really want to run some, really kind of run it for a test drive here, give me a call. I can set you up for our premier trading platform, RJO Futures Pro. Fund it with $100,000 in a demo account. Give you real-time streaming charts and quotes, and really let you take this thing for a test drive. You can test drive some of my trading ideas and strategies. You can test drive your own, and you can do it all in real time with a $100,000 simulated account. It's an awesome platform. Give me a call and I'll walk you through. We can get you set up there for the registration on it. The number there is on the screen, as well as my email address. So feel free, give me a call, shoot me an email. We can talk, get into more detail on how to play this oil. A lot of exciting opportunities there. And of course, remember that futures trading does involve a substantial amount of risk. May not be suitable for all traders. Good luck and good trading.